Hello everyone, and thank you very much for joining me for today's video. Today we're going to be looking at the S&P 500. It's trading at support. Um, my name is Russell Shulman, Senior Market Specialist at FXCM. I'm just going to go bring up our high-risk investment warning. I'll keep this on screen for a few moments. Okay, and here's our commentaries disclaimer. All right, so let's just take a look at the S&P 500, and you can see we've got support right here. It's busy trading at a support level. And what we can do is perhaps see if this is a pattern. And the way we're going to do that is we'll draw in a trend line, drawing to about there. Let's just take the extend right off. And then what we can do is just draw this parallel. So perhaps some sort of flag pattern. If it's a flag pattern, the breakout should be to the upside if it's a valid flag pattern, and we should see the support holding and then a movement to the northeast. Let's just take a closer look at the S&P 500, and what we'll do is just take a look at it in terms of our zone. So we've got the daily chart on the left, but we've got Bollinger Bands that are overlaying. And you can see we're in zone 3. Zone 3 is our bearish area. If we are talking about a flag, then there are a few things that have to happen technically. The first thing is we would need to close in zone 2, which is between the two blue lines. In other words, would move out of zone 3 into zone 2. That would be a relative strength movement. It would be a movement of strength. And then if we get back into zone 1, of course, that would be first prize. It's interesting to see where the S&P 500 is positioned right now, because effectively earnings season is starting, right? We'll get the banks out tomorrow. The other technical development I'd need to see on the daily chart, I'd need to see the RSI break above this downsloping green trend line and ultimately reclaiming the 50. So we want to see, let's just put in an arrow here. We want to see a movement from zone 3 into zone 2. So that would be relative strength. And then we'd need to see the RSI pick up, take out the down sloping trend line and reclaim that 50. Let's just take a look at the hourly chart. And what we'll do is just add in a %D here. Let's make it red. So the bottom indicator is the Bollinger Band. You can see the Bollinger Band is attempting to turn bullish. So that would be trigger 1. And the EMAs are attempting to cross positively. So the green 5 hour is looking to cross above the orange 10 hour. It's not quite conclusive yet. We need to see at the end of this hour and see if the candlesticks build positively here. We do have a candlestick that's got a higher high and a higher low, so perhaps some positivity coming in, but then we'd really need to see the EMAs develop that angle in separation. We can already see that the RSI has popped 50, so it has moved to the bullish side of the indicator. Let's just make this green. Okay, so just take a look at this green rectangle. The RSI is on top of 50. If it holds above 50, then I would expect the EMAs to cross positively. And the biggest test will be the stochastic, the measurement of momentum on the stochastic. If it makes its way through to the upper quartile and holds, then we'll get a swing and if we get a swing, then potentially reclaiming zone 2. There is a lot that still has to happen here technically. Let's see if the traders do feel that this is a buy in the dip type of opportunity, given that earnings season is upon us. And I think if we get good earnings, good growth, despite the fact that the yield's been pushed back now from June, there may be a tailwind behind the SPX 500. Let's just keep an eye on that. Thanks very much for joining me.